How do you research an investment property? What things do you look at? How do you know if you're getting a good deal? How do you know how much you're going to rent it for? We're going to answer all these questions today. We're going to look into the ways that I personally research buying an investment property, what I've done in the past, how to check what you're going to rent it for, going beyond what the real estate agent tells you, how you know what the market's doing, how it's going, and potentially what you're going to sell it for, and really 4 key market elements that you need to be looking at right now on your next investment property. So let's get in. Now, point number 1 that I want to go through, jumping straight in, there's no time to waste, is you really need to work out what your why is, why you're investing in the market. Are you looking for, capital gains type property? Are you wanting to flip it after 12 months? Are you wanting to renovate and sell it? Are you looking for something that's, you can add a bit of value and you can maybe put a granny flat in the back? Or you're just looking for a nice, strong rental yield? Now, all these different factors actually mean you need to be looking in different areas and different suburbs. So knowing this up front can really save you lots and lots of time. Because what I always see in people where they make mistakes is not really knowing this, not being clear. And you can go from looking for a place with a great rental yield, then flipping around and going to look for something that's a lifestyle property that you might want to one day move into. So I think the most important factor before you get started, before you start researching, before you potentially waste hours and hours of time looking at property, is work out what you why and work out what you want to get out of it. The second thing to really look at is probably the costs. Can you afford upkeep and management of a property? If you're buying like an old Queenslander, for example, that might cost a lot more compared to, say, a unit. So you need to be looking at your budgeting and what you can afford to pay into there. So I think those 2 points are really important to get into. Let's just jump into point number 2 now, and that's researching your suburb and surrounding area. So for today's example, we're going to go through a bit of a case study because it's so much easier when I've actually got a property to look at. And we're going to look at this one. It's one that my mate was looking at buying recently. Simon, it's 82 Charlotte Street in Paddington. So it's currently on the market. As you can see here, like a lot of real estate listings these days, especially in Brisbane, it's on the market for auction. Or the other thing they do, which is so annoying, so irritating, is that they put it on for offers over a certain point, or don't even put a price. So you've just got to guess and work out, and that's where this research is going to be awesome. You're going to really love it. But anyway, how do I know? I know Paddington, but you might be buying investment property, you might be interstate, and you want to know, well, is this property actually going to be a good renter? The first tool that I suggest using is Walk Score. Now, Walk Score is an amazing, amazing tool that goes way beyond what Google Maps can do in telling you what is in a local area. Now, why is this important? Is because if you're getting renters, they need to have good public transport, they want to have good local amenity, and if you want to get the maximum rental amount you can get for that property, you want to have a high Walk Score. So like you can see here, it's a free tool. Walk Score gives it a great Walk Score and says, people can do their daily errands, they don't necessarily need a car, which is another thing that, it's more and more common for people who don't have a car and they're using Uber and those other services, and some great transportation. The thing that I really like on Walk Score is this time travel map. So it gives you a sense on how far your potential renters can walk, and even the transportation piece and how many buses and trains and how connected is it? Because at the end of the day, if it's a place like Paddington, having a car space is a bit of a luxury, and not everyone gets one. Your renters are going to be looking for that, and you're going to be able to secure great rental there. This has a bit of info on rental, but we're going to come back to that in a sec in a later point. The other tool I really like using is this one called Microburbs. So it basically shows you, it's a really comprehensive snapshot and shows you all the basically the census data. It shows you property sales data and a bit of history. And it's a good way of just getting a quick and dirty look at what the market's doing. So you've got some growth stats there, like you can see. You've got some, it says planning applications in the nearby area, and people putting a bunch of units behind your investment property, or if there's going to be a new highway going there, that gives you all that data. And these scores I really like. So it shows you HIP score. So if your target demographic for renters is uni students, you can get a feel for how who's potentially going to rent your property, and really you kind of get an idea on how that's going. And a bunch of other stuff there, communications and sales history. But like I said, we're going to go through that down the line. So anyway, between these two, between Microburbs and Walk Score, you can get a really good overview on how that suburb's performing, what the local amenities are, and if it's actually going to be a good buy to help you achieve your strategy, be it rental, be it capital gains, etc., etc. So I think that's the most important thing, and that's where you really need to be starting when you're looking at it, doing research on the surrounding suburbs. Third point you need to be doing when you're researching an investment property is understanding and researching the rental income that you'll get on your investment property per week. So there's basically 4 fundamentals that you need to look into when you're researching rental income. Number 1 is low vacancy rates. So low vacancy rates is basically showing how many vacant properties are on the market. And with all this stuff, it comes down to supply and demand. So if there's too much supply, so if vacancy rate's really high, that means there's going to be a lot of properties on the market for rent, meaning it's much more competitive. And it could mean there isn't enough demand picking up because there's more and more on the market and it's actually a softening market. So with Paddington, as you can see here, over time, it's peaked and it's got as high as sort of 8%. When was that? In 2016, January. But historically, it's probably around average, about 3.2%. And the vacancy rate average in Brisbane is around 3.5%, 4%. So it's actually probably a pretty good market at the moment looking at that sort of stuff. Point number 2 to check if the market fundamentals in rental are stable weekly rent. So stable weekly rent basically shows that if the market's in decline or if it's in growth. So if weekly rent is dropping, so if people are desperate to get in there and they're not being able to fill those vacancies, it means that the rental market might be a bit soft and you might have issues with renting your property and it could be vacant. As you can see with Paddington, the weekly rent is reasonably stable. It's a bit up and down, and that's because in Paddington it's a bit of a difficult suburb because there are some median house price. There's average properties like this one might be $800,000, but then there's also properties that sell for $2-3-5 million, and that can throw that rental figure out there. But I think broadly speaking, it's pretty flat, and it's not as if it's sort of trending downwards. So I think that's still fundamentally a good indicator for that market. And I guess, with all these tools, it's all just go to sqmresearch.com.au and stick in your postcode. But we'll just keep going through in this specific example. The next one to look at, which is critical for you as a landlord buying an investment property, is good rental yields. So the rental yield is effectively calculated as the gross rental. For this property, say if you're getting $675 a week, you annualize that, times that by 52, and then divide it by the value of the property. So say you're going to buy it for $875, and that gives a rental yield of around 4%. So this chart here on SQM Research, and again, you can put your suburb postcode in down the bottom there, shows that the rental yield for 3-bedroom house, was the purple line, is again, it fluctuates between 3 and 4, but if this property is calculated around 4%, that's probably around about where it should be. If, for example, the rental yield in this property worked out to be 2%, then you're probably overpaying or it's being under rented and it might not be a good deal and you have to walk away from it. So again, it's a really good figure. It's a quick way of, especially if you're going through 10 properties a day online, you're trying to check if it's a good or a bad investment. This is a good way to really just rationalize that list and find out the good from the bad. The fourth indicator for rental income per week and rental market is the total supply and demand balance. So this impacts more so on the buying side, but it also does impact you on the rental side because, again, if there's a lot of stock coming on the market, and we've probably seen it around Brisbane and some of the surrounding suburbs with apartment stock, if there's lots and lots of stock out there that you're competing against and there's not as much demand, it means that your rental prices are going to get smashed around and you'll potentially get less in rental. So as you can see here, this is a 3-bedroom house Simon's looking at. The rental for Paddington, the number of houses for sale rather, so that means the supply on the market, has been pretty flat over the last few years since 2012, and relatively speaking, it's been pretty good compared to the purple, which is the rental market, and as you can see there, that's kind of been trending up a bit. So you might be a bit worried if you're buying an apartment in Paddington because you're going to be competing against more and more, and it could be a case that demand isn't getting absorbed. So overall, for a house in Paddington, it looks like that supply and demand piece is in balance, and kind of keep moving forward with this purchase. Point number 4, how do you work out weekly rental for this property? Now, there's a couple of ways. You can, one, just get in touch with the real estate agent. They can tell you what it's going to rent for and you can go on their word, which you can do. I like to find out myself because, the real estate agents are incentivized to sell you a property. They want you to get in that investment property. They want you to buy it. And if they're, add another $20 a week, $30 a week, $40 a week for them, they don't really care because they're not really liable for that letter. You can try and test it in court. It'd be tough. But for you as an investor, you need to know and you need to be across these figures. So the easiest way to do this, it's crazy simple, is just jumping on realestate.com.au. With the rental market, it's crazy fluid. So people, if you think about it, when you need to rent a property, it's not like you're looking 6 months ahead. You need to move out of a property, your lease is up, you start looking today, you inspect it tomorrow, and then you might move it in a week's time. So the rental market actually is super fluid, and checking this way is actually one of the most accurate methods. A friend of mine who's a senior property manager, this is all they do when they're researching the properties. So jump on realestate.com.au, go to the rental section, put in your target suburb, put in the type of property. So obviously it's a house to a house, it's an apartment to an apartment, the number of bedrooms, and then just hit search. So, super slow. Anyway, that'll come back with a bunch of properties which you can shortlist. The best way of doing this, like I've got in this table here, is you basically just list out the property's address, you list out the asking price, and then you just do up your own commentary. And again, property is super subjective. So, you broadly want to make sure that it's got the same amount of bedrooms, that it's got the same sort of amenities, that, the same sort of garden. If that property has a pool, that might be valued for more. But just kind of put your own commentary there and work through. And all I literally did was just, go through this, 13 Plunkett Street, 645, boom, put it on there, and work through and get sort of 5 or 6 comparable property listings, and then work out an average on that. So based on that analysis, it looks like that this property could rent for between $620 to $690 per week, which is good. So how do you research how do you work out what the market value of a property, an investment property? So let's again look at the fundamentals, because this is where it all comes from. So the first fundamental you need to be looking at is low days on market. So you want to be understanding, it's again comes down to supply and demand. So if the market's slowing down, if it's taking longer for properties to sell, it potentially means that there's less demand. So then the properties are on the market for much longer, and it could potentially be harder for you to sell, or consequently as an investor, it could mean you could get a better deal in that market. As you can see here in Paddington, it's ticked up a little bit, not a lot. So it's at 32 days in 2006. So this data's not super current, but at least gives you a bit of an idea compared to the average in Brisbane. Overall, though, that's pretty flat. So it just means that supply and demand's pretty imbalanced. We've got a better tool on this, but we're going to come back in a minute. Next one we look at is stable weekly asking property prices. So again, weekly asking property price is another really fluid and a good way of being able to see what people are asking for in the market, and where property prices are headed, better than sales history, which can take 2, 3, 6 months for a sold property to hit the market and be actually updated on RP data. So as you can see here, again, there's some more detailed data down here, but on 3 bedroom, the change week on week, it's probably a touchdown. The 3-year change in Paddington, what's that? So it's actually down a little bit. The problem with this data, and this one specifically, would be again coming down to Paddington being a suburb where there's properties selling for $600,000-700,000 3-bedroom houses. Then there's 3-4 bedroom houses selling for $2, $3, $6 million. So you kind of need to look a bit beyond this one. But again, as a quick back of the envelope, easy way of looking at it, that could mean there might be good buying potential because the market's down a bit. Then the next one to look around is supply and demand, and just make sure that's all in balance. So it comes back to that chart we already looked at and the total property listings, and just making sure that's, there's not too much new houses being constructed, because it means that the value of the property could be coming down. Then the fourth one, and this is probably one of my favorite tools because it's super easy and it's free, is demand to supply ratio. So DSR uses a few more data points than my simple metrics to estimate the supply ratio, and it's effectively a simple indicator of capital growth. Let me see if this is going to work. So Paddington, Queensland houses. And so as you can see here, it does a bunch of calculations, which effectively is doing the same stuff that I showed you in those other charts, but it does it all fancy. It gives you a score out of 100. Pretty much over 50 is pretty good. So like I said, typical value is 1.15, which is a lot more than what this property is potentially going to sell for. But as it says there, demand outweighs supply in this market. It's a healthy market for investors wanting to apply some value add strategy. Buyers are sometimes able to walk away with lowball offers, selling again at prices they ask for more often than not. So again, gives you a bit of an idea on the kind of strategies that might work and might not work in the market, and just make sure that that all fits together and works for you. So now that you've got a good idea on researching that market and what's selling and what isn't selling, now we need to go through point number 6, and it's how to determine your investment property's value. So what are some of the factors that determine an investment property's value? Number 1, and these are the same as what a bank valuer will use to value a property. So they're good to know because you can use sales and you can have a guess, and there's a lot of online tools that do it for free, and we'll have a look at those in a sec. The fact is that if a bank valuer doesn't use those sales as actual comparables, you're wasting time. So, number 1, for a property to be a comparable sale, so a sale that you can compare to work out what your target property's potentially value is, the sale needs to be within 2 kilometres from your target home, the one that you're looking at buying, and it needs to be in the same suburb. So if you're comparing a property in Paddington with a sale in Red Hill or Ashgrove, it doesn't really count because it's not the same suburb, so it's different prices. Number 2, obvious one, it's the same type of property. So if you're buying a house, you're comparing to houses. If you're buying a unit, you're comparing to units and not vice versa. And that's pretty obvious. Number 3, you're comparing it to another property with the same amount of bedrooms, bathrooms and car parks. So if it's a 3-bed, 1 bath, 1 car space, you've got to compare it to that. You're not comparing it to a 4-bedroom, or you're not comparing it to a 2-bedroom, just because it's not the same thing. Number 4, and this is important, especially in houses in Brisbane, because land value actually makes a big difference, is that you're comparing like for like land size. So in the case of this block, it's around a 400 square metre block, and we'll go through that in a sec. Number 5, to determine a property's value, you need to look at the same or similar, you need to look at a sale that's occurred within the last 6 months. So just because you might have had some really great sales that occurred a year ago that could justify a higher price or a lower price, they're not valid. They need to have happened in the last 6 months for them to be considered a comparable property. And then number 6, the property needs to be in a similar condition and have the same level of improvement. So effectively, if it's got a pool, same sort of, it's a newly renovated kitchen, a bathroom, whatever. So practically, how do you then find out what your property should be worth? There's 2 tools that I use. The first tool is Sold Price. This one, the website, you basically put in your filters, so it's 3-bedroom, properties valued, sold in the last few months, and then you basically write down a list of these. 82 Kennedy, 36 Kennedy rather, 22 Norwood Terrace, 85 Charlotte, and then you also write down the sold date, so write the address, the sold price, the sold date, so it's the last 6 months, the type of house, the land square meterage, and just your own comments, because again, property can be a bit subjective, but this gives you a pretty good idea on what the property should sell for. So based on these, obviously there's some older sales, the ones in July, I've put as an estimate between sort of 915 to 985,000 on this. The other way you can go about working out a property's value, a quick and dirty way, is using RP data valuation. So there's a couple of free tools like this one, propertyvalue.com.au, but I just find the values are just all over the shop because it's not very accurate and it's generally not very good. So we have a corporate subscription to RP Data. We can do a valuation for you. Literally just drop me a line, use the contact form in the description. Happy to do it for free. Just send me the property address and we'll send you an RP Data electronic valuation that will give you a super accurate indication on what the property is going to sell for. So in this case, which actually was pretty similar to my value, RP Data thought it was $975,000 for that house when it goes to auction, which, to be honest, is a bit outside Simon's budget, so it was worth this exercise and him sort of moving forward. Now, the last thing that you want to do when you're researching an investment property in Brisbane, and although probably in Simon's case this should have been the first thing, is to find out if your property's gone swimming. So this is our last tip, but I think it's so important because on this, in Brisbane especially, we had the floods in 2011, and they call them the Q100 floods that happen every 100 years, but it feels like it happens more often. So if you just go to floodinformation.brisbane.queensland.gov.au, type in the address, you can get a flood report. This one has issues actually. So this report's for free. It gives you a summary. The problem with this property in particular, it has flood overland. So as you can see from this map, it actually has a medium chance of flooding. So it means it has a 1% chance per year of being flooded, which then means that it could be not a suitable investment property because it's going to cost you more if it gets flooded. You might have vacancies or tenancies and just could be a bit of a dud of a property. So that's kind of the wrap up. That's the best way to research investment property. Number one, work out your property's criteria, what you're looking for. Is it growth? Is it capital gains? Number two, research the surrounding suburb and the area and just make sure you get to see what the amenities are. Number three, research the rental market and the income per week. Number four, calculate the rental income per week. Number five is, again, research the local market. Number six is work out your your sell price per week. And number seven is just check the flood and everything else because you don't want to buy a dud. So that's it. What did you guys learn? What was the tip that you most like to take away from this? So let us know in the comments. Would love to hear from you guys. And if you have any questions, make sure you hit us up at huntergalloway.com.au. Cool. Thanks, guys. See ya.